Most investors don't lose money because of the market. They lose it because of emotion. Today, our wealth is scattered across banks, private equity, and crypto, making it impossible to see the big picture. Mini is the first wealth wellness hub that closes this gap. We unify your entire TradeFi and DeFi ecosystem into a single wealth wallet. We don't just track your balances, we track your behavioral resilience to ensure you stay disciplined when the market gets volatile. We're also able to identify risks. Our cross-asset synergy card reveals a dangerous positive 0.99 correlation. Traditional and digital assets are moving in lockstep. To mitigate this, our AI serves a volatility alert, prompting an immediate stress test to protect the user's capital. Moving down, this is where we unify and secure our data. We're able to see all our holdings, from crypto to stocks to properties, combined into one page. Easily accessible and viewable without needing to click into many different apps. We ground these numbers in reality with live milestones that allow users to add monetary goals, and Mini provides solutions if there's a short of cash. Next is the behavioral resilience, which tracks the user's behavior in the market. Finally, we quantify the profit of holding and not panic selling. When we toggle the baseline, which is for not trading, versus blue line for active trading, we see the truth. By simply holding firm through market noise, we captured a 29K profit. Now to our wealth analytics page. So how do we improve our wellness score and optimize our portfolio? We build a customized mean variance optimization quantitative model in our fast API Python backend. When the user requests an optimized portfolio, our math engine dynamically reweights their assets to maximize their Sharpe ratio against the current interest rate. But quantitative math is hard to read for normal users. So we pipe those mathematical outputs directly into a large language model. The LLM acts as a translation layer, generating this algorithmic rationale in plain English, explaining what exactly the user should do to their portfolio in the subsequent example. The LLM explains why we are reallocating towards private equities and reducing digital exposure. Next, let's look at what happens after we click Optimize a portfolio. Trade recommendations are as shown to ensure our portfolio is more balanced. And from a pure engineering standpoint, our backend is entirely fault tolerant. We are pulling live market data, but we engineer a resilient static fallback layer. If the live data API is rate limited by cloud providers, the app seamlessly switches to a local fallback dataset to guarantee 100% uptime. Next up is the macro stress tester. We don't just look at past performance, we simulate the future. I'm going to trigger a tech crash at moderate severity. Our backend maps the user's portfolio into categories and applies targeted rule-based stress parameters. For a tech crash, the algorithm isolates their tech exposure, like Apple, and applies the severity multiplier directly to those specific assets, simulating a localized market shock. We then pipe that localized shock data directly into our AI analysis engine. The LLM doesn't just say you lost money, it connects the math to the user's life. It flags the any monetary goal at risk and instantly formulates a defense plan, recommending a strict 25% cap on tech and a rotation into defensive sectors. Now let's switch to advisor's view. A wealth manager doesn't have enough time to dig through 50 accounts every morning, so we prioritize their wellness. Let's look at David's profile since he's at risk. He's sitting on 82% equities. Because he's so over-concentrated, his primary goal, buying his HDB property, is now $20,000 short. He's taking too much risk. David's behavioral radar shows massive bias in loss aversion and herd mentality. He's chasing the crowd and then panicking when things dip. This has costed him $172,000 in missed gains compared to doing nothing. Normally, an advisor will spend an hour preparing a report for this. Mine does it in seconds. Our AI maps his risk to specific HDB goal and generates a fix. Trim the equities by 12% and move that 20%, $20,000 into a liquid account to secure the house. In conclusion, Money turns fragmented data into financial resilience. We have built the first platform that protects your wealth by protecting your discipline. Because at the end of the day, the best asset in any portfolio isn't a stock, it's a user who doesn't panic. With Money, when the market flinches, you won't. Thank you.